the Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. I am with Danielle Park of jugglingdynamite.com for our bi-weekly get-together. And I think, Danielle, we're going to come up with a new name for it called Teeter Totter Times, because we are balancing on the Teeter Totter. 1 minute it's up, 1 minute it's down, but somebody's going to get their butt banged on the ground soon, aren't they?
Yes. Well, that teeter-totter, Kerry, has become the sum total of world markets in the last few years because of all the liquidity intervention, because of globalization and the amount of trading institutions that work in and out of all international markets at once. Another way of saying this is that we've noted the typical correlation between various asset classes, whether it be commodities, stocks, over the last few years, and high beta currencies is nearly perfect. It's about 90%. So whenever you have strong moves on, if you're going to look for any meaningful diversity in these markets, you have to look for what could possibly move counter to the general trend in overall markets. So that teeter-totter has been the thing that I found the most useful in helping people understand the big picture. Essentially, the U.S. dollar on the one side, when the U.S. dollar is falling, you see the risk trade rocketing up. And we've seen that for the past several years. The U.S. dollar peaked in 2001 and fell all the way to make a triple bottom in the U.S. dollar index just around 73 last year. And since then, it's been in recovery mode again. So what that means is that as it increases, you notice that the risk trade starts to capitulate, and we've seen that whether it's in the euro, which is today below 121 again, whether it's equity indices, which around the world in many areas, Kerry, are now back to test their 09 lows, and some are falling beneath that. So it's very interesting. I think that this play is going to continue for a while here, and the only wild card is, to what extent, if any, further U.S. easing from the Fed might impact that teeter-totter in the short term.
Interesting you say that, because you're looking, like you said, the euro broke 121, and the dollar is the mirror image of the euro for all intents and purposes. So as the euro's been imploding, the dollar's been the direct beneficiary of it, as have the Swiss franc and government debt of Australia, Switzerland, and Germany, where they're even giving negative interest rates, right?
Yep, there's 6 countries basically today which are now charging people for the privilege of loaning them money. That's the Germany, Finland, Austria, Denmark, Switzerland areas. But basically in developed countries, Canada is another one who's been receiving inflows into our bonds, that perception of a safer haven than the European mess at the minute. I think what's been very interesting and surprising to many is that China and Japan have continued to add substantially to their U.S. Treasury holdings this month. And the latest data we have is for May, but it showed a 5th consecutive month of strong buying of U.S. securities. And so the other thing is 97% of those billions and billions of inflows from foreigners are going into government bonds, not into equities. Very little is actually making its way into equities. But I think what you're seeing is the two worlds, I call it. The one world of the real economy, which is recessing in country after country after country. And I think the U.S. U.S. has actually already started into this next third recession of this secular bear period. And yet, the only thing that is not so far confirming that is U.S. equities. Other markets like Italy and Spain, for example, are back to where they were 10, 12 years ago, Carrie. The Canadian market is back to where it was in early 2009. Chinese Shanghai is now back to where it was in March 2009. So as these sort of leading indicators revisit those prior lows, it leaves this very ominous gap between the S&Ps of the world, the S&P in the U.S., and everything else.
Yeah, well, there are those, the more cynical among us, Danielle, who believe that the federal government, through the so-called erstwhile plunge protection team, is busy bidding up the Dow Jones average and the other averages in the states to at least give the appearance that recession is not on the way. Do you think there's any validity to that?
I actually don't think they bother manipulating or intervening in the equity markets. I think it's too small a market relative to the bond and currency markets. I mean, that's where they get much more bang for their buck, if you will, and that's where the fiscal policy, the monetary policy really focuses there. So the U.S. dollar index through 84 today, that is an incredibly enormous market, Carrie. No one player could be the pinning underneath that price level. So that really shows you that the world capital is voting with its feet in favor of the U.S. dollar as this relative park for the time being. And I don't blame them. You got to look around the world right now. You see insolvency left, right, and center, and you see other countries on the road to insolvency. You have to try and pick your poison in that.
And speaking of picking your poison, isn't it interesting that it looks like they're actually going to start arresting people for Liborgate?
Well, wouldn't that be refreshing? Wouldn't it be wonderful to see some actual teeth come back to bite, besides these nonsensical little fines that are just the cost of doing business? But I thought it was very interesting that LIBOR, there's, criminal charges. I think that we may indeed see some criminal charges in this recent fiasco, and the reason is that it's very much a cumulative pressure that's being brought on the politicians and the regulators to come up with some heads. They've embarrassed themselves repeatedly in the last several years with inaction and tolerance of all these criminal acts, and now finally, I think coming into the election, and the scale of the LIBOR fraud, Carrie, is just mind-boggling, right? It's so big, and
breathtaking.
And you get all these lawyers now jumping on the bandwagon, suing on behalf of all the people that have suffered because of this manipulation and rate fixing. But I thought one ironic piece stood out for me, and that is that Sarbanes-Oxley was brought in 2002, pending, in the U.S. after the whole Enron fiasco, Tyco, all that, horrible fraud in the stock prices in companies issuing financial statements and CEOs saying, oh, sorry, was that misleading? I never actually looked at that. So they said, sorry, we're going to bring in a provision that says that expands criminal sanctions under securities law to say that there's a general criminal fraud provision now. And that particular general catch-all, if you will, in this area drove a lot of companies to leave the United States and New York and go to the City of London. And so I called it the rats that left the ship, right? They went to where they were less regulated and less scrutinized. But now we still have Sarbanes-Oxley on the books, and indeed that is maybe the provision which will be sufficient to catch this LIBOR scandal and to, there's antitrust regulations as well and pure bank fraud. But it'll be interesting to see which particular provision catches this behavior at long last.
Yeah, it's just so interesting because everybody rails against Wall Street, against the 1%, the financial types, and yet the uproar from the general population over Liborgate has been muted, if non-existent. So they complain, and then when they really have something they can point at, they're nowhere to be found.
Well, I think there's a general complacency which is typical of human beings. Many people are focused on survival, and frankly, in the United States today, that is at the highest level it's ever been in about 40 years. And I say that in the sense of poverty rates in the U.S. are now climbing back to where they were 40 years ago. You've got 47 million people just living on food stamps. So I think that in crisis mode, it's hard for people to really have much time, attention, or energy to focus on schemes as, huge and nefarious as LIBOR rate fixing. How does that really apply to the average bear who's trying to sort of get a meal and make a buck in the local Starbucks, right? Because that's the kind of jobs that are available today in America. But basically, I think that that could be partly, a function of just it's such an esoteric concept, and secondly, they're just so damn busy trying to keep their head above water that the masses are not paying much attention. However, there's a lot of people that are not in that destitute condition, and they are in a position to scrutinize what's going on, and I think they should keep up the pressure here to use this latest string of fiasco as a inflection point. If we don't ever fix this, Carrie, we will never get anywhere. We will never get back to productive business and ethics and reasonable practices. Corporations, will never be looked on as respectable entities again if we don't recover some sense of, ferreting out the culprits and the flagrantly illegal behavior and punishing people, and that requires jail time, not just a slap on the hand.
Well, I'll believe it all when I see it, because there's no difference between the government in the U.S. and Wall Street, and I think the same applies in the U.K. So to see the system somehow purge itself, I'll believe it when I see it. I just don't think it's going to happen. I think they'll only prosecute when they're forced to. There's so many other cases of these people getting away with out-and-out criminal conduct, like John Corzine being hooked into the machine running the country right now, and nobody even questions him or looks into any criminality on his part, and there's $1.8 billion in customer funds missing. Here, there's a few basis points, and on the aggregate, it's a humongous fraud that affects every man, woman, and child, that affects you, regardless what country you live in on the planet, but yet it's a lot less harder to get your arms around than a fraud where customers lose $1.8 billion and you can say, these people lost money. So I hope that you're right. I hope that they're going to do something. But being the cynical attorney, I'll believe it all when I see it. I
agree with you. I think that I think there's two things that are in the Corzine case. Part of the problem is that the poor laws and regulations to start with allowed contracts to be written and signed by customers unawares most of the time about the fact that rehypothecation was part of the deal they had come to. In other words, buried in those applications was this allowing them to do this rehypothecation. I think very few people understood that, but strictly speaking, he can stand on that as, here's what we were allowed to do and this is what we did, and it wasn't our fault it went sideways. Well, I don't think it's a justification or a full defense, but I think that is what's muddying the waters in that particular case. The other thing I think that's going to be a cathartic moment here is, and this is what always comes back to what do you call it, clean out the pipes a bit, is another massive bear market. I really believe that things are setting up right now very similar to the summer of 2008 when we were heading into the fall, and a lot of the technical breaches that we've seen, a lot of the money flow that we've seen, the U.S. dollar breaking through 84 again today. A lot of these indicators suggest to me that we could be in for a shockingly bad result over the next 6 months in asset prices. And if that's the case, if it's shown that we really have got zero for the tripling of the Fed balance sheet, for the, for all the debt money that's been printed over the last 3 years, if we are again in recession, and we are confirming that in the next several months, I think you'd be amazed how much asset prices can contract violently, especially given the amount of leverage still in this system, and that will shock people, I think, into, waking up into the horror of what's going on again, and at least bring some pressure to bear on what are we going to do, what heads can roll, what changes can be made. It'll all come after the horses have left the barn again, but I think that is the great initiator, because right now they can say, well, look, we've accomplished, this, basically higher stock prices in the last few months. But as that erodes and as that's given back, and as pension holes gap wider because now equities have also, crumbled again, I think that you'll get to another crisis point.
Well, I think you're correct on that because, like you said, nothing's changed. The system hasn't been purged. It hasn't been reformed. And until that occurs, as well as getting these central banks and governments out of the markets because they're just distorting, causing malinvestment, and causing the cycle to repeat itself over and over again. And on that note, we've got to repeat this in 2 weeks, where I think we're going to know a lot more about what direction the markets are taking, where they're heading. So we find you on jugglingdynamite.com. And what's your other site again?
Oh, Venable Park Investment Council. VenablePark.com is my asset management company, and the blog is Juggling Dynamite.
Yep, which we don't miss Juggling Dynamite because there's a nice picture of a Teeter Totter on it, and that's what the world economy is doing. And right now, the dollar's on the bottom, but it's going to push up at some point, and we'll see what happens on the other end. Be well. We will talk to you again in 2 weeks.
All right, Carrie, thanks.